Fannie Mae just revised downward the forecast for home sales and mortgage rates through 2025. This is very much noteworthy because they believe a drop in rates will not cause sales to rise just yet. In today's video, I'll share Fannie Mae's latest real estate market predictions through 2025 for home sales, mortgage rates, and home prices. I have a lot to share in today's video, so let's go ahead and dive right in, and I appreciate you guys watching today's video. This was just posted from Fannie Mae last week on August 21st. It says, despite the recent pullback in rates, total home sales, which includes brand new home construction, new sales for new houses, and also sales for existing houses, so that's total home sales, are expected to come in lower than previously forecasted through the rest of 2024, and then not to pick up very much until further out in 2025. This group from Fannie Mae, which is called their Economic and Strategic Research Group, notes that purchase mortgage applications, which is basically a way to say that people who are applying for a loan to buy a house, that's a mortgage purchase application. That's based on data from the MBA, by the way, which I'll share that with you guys in a little bit. Those have barely budged in response to a more favorable rate environment. So rates coming down from the highs we saw back in October, but despite that, application numbers are still down year over year. Also, other measures of home buying demand is including applications, but also showing requests and also listing views, which all remain below last year's levels. So let's have a look at the MBA's latest report just posted last week on August 21st. This report covers the week ended August 16th. So their seasonally adjusted purchase index, which of course is a measure of people submitting loan applications to buy houses, that decreased by 8% from the same week 1 year ago. And according to them, that is despite the 30-year fixed rate decreasing for the third consecutive week down to 6.5%. The lowest rates we've had going back to May of 2023, but despite that, application numbers are still down by 8% year over year on a national level. In regards to showing requests going down, this is according to Redfin, for example. Redfin has what's called their Redfin Home Buyer Demand Index, which is a measure for requests for home tours and other home buying services from Redfin agents. That also decreased by 8% year over year, but it was the smallest year-over-year decrease since April. So mortgage purchase applications are down 8%, but also requests for home tours and other home buying services from Redfin agents is also down by 8% as well. In regards to listing views, I'm not too sure what they mean by that. I imagine they're talking about home tours potentially. So looking at the most recent trends we have from the National Association of Realtors, this was posted just a couple days ago. They showed that real estate showings across the United States this July were up by 1% year over year. So even though we have approximately 30 to about 40% more homes for sale on national level, home showings only increased by 1% year over year. Also, according to showingtime.com, they look at the amount of people or amount of agents showing houses to their home buyers, how that compares to the start of the year. So here is 2024 in orange, and we have 2023 in the dark blue line, and 22 is the lighter shade of blue. So for the week ended August 26, real estate agent showings increased by 6.4% compared to the start this year. Compare that to the same time frame last year, we were up by only 1.7%. And also in 2022, it decreased by 7.4% compared to the start that year. Going back to Fannie Mae's housing forecast here, it says their home purchase sentiment index continues to report a near record low share of people indicating it's a good time to buy a house. So here's that report just posted on August 7th. It says only 17% of people who did respond to the survey said it was a good time to buy a house. That was down from 19% in June. They have a chart going back to June of 2010. This is pretty eye-opening here because the share right now at 17% who said it's a good time to buy a house, this is very close to the all-time record low that was set back in November at only 14%. It also decreased in May, also down to 14%. So we're higher compared to the all-time record low, but not too far off that though, at 17% right now. What's also noteworthy as well is that basically from 2010 through 2017, over 60% believed it was a good time to buy a house. Now it's only 17%. I'm guessing that a low share of people are saying it's a good time to buy a house due to elevated home prices, but of course, elevated rates as well, which of course makes it very challenging for home buyers, or I should say the average home buyer, to buy a house right now due to affordability constraints. In contrast, based on the survey from Fannie Mae, 82% responded and said it's a bad time to buy a house. This is very close to an all-time record high. So for example, the all-time record high was just set a few months ago, back in May. Back then, 86% believed it was a bad time to buy a house. Now it's at 82%. This is absolutely wild looking at pre-COVID levels. 2010 through 2019, that share was around 20 to about 40%. So the high share or low share of people who said it's a bad time to buy a house back then, and right now, very close to all-time record highs who believe it's a bad time to buy a house, and also near all-time record lows for people who believe it's a good time to buy a house. And in my opinion, again, due to affordability constraints on a national level. Based on all this information, Fannie Mae actually downgraded their forecast for home sales through 2025, with the expectation that home buying will not pick up very much until income growth begins to outpace home price growth and rates move closer to 6%. So they believe that home sales will not pick up until rates decrease from the around 6.5% rates we have today down to 6%. But on top of that, they need to see that home price growth will be less than income growth. So this has been a common challenge we've been seeing for several years now, because back in 2020, 2021, home prices surged by double digits, but income growth did not nearly increase at the same rate. And because of that, we're seeing income growth kind of going like this, but home prices going like this. And on top of that, rates increasing greatly as well, making it very challenging to buy a house due to affordability issues, right? So we're not expecting to see a significant rise in home sales until that improves. In contrast, on the new home side, in other words, sales of brand new houses, this group continues to expect comparative strength relative to existing home sales, as strong builder margins are likely to drive concessions in the quarters ahead. So based on earnings reports from home builders, they are still reporting fairly strong margins on sales of the houses. Therefore, they have room to offer more concessions to home buyers in order to drive home sales. However, a near-term slowdown in housing starts, in other words, the beginning phase in the construction of building brand new houses, housing starts is expected to slow down as the number of new homes for sale that are already under construction has risen, likely delaying new projects until inventory can be sold. So we have a glut of inventory of brand new houses that are actually for sale right now, basically on par to 2008's levels. And because of this, they're not forecasting for housing starts to rise by a significant amount due to this high amount of homes under construction and for sale right now. Fannie Mae also provided this as well. We have revised downward our existing home sale forecast despite a lower rate environment or outlook this month. So again, they're forecasting that mortgage rates will decrease through at least 2025, but home sales will not pick up very much from that. They also talk about inventory levels as well, and they're spot on regarding this. Active inventories, in other words, housing inventory, the amount of houses for sale of existing houses has been increasing. This increase has not been because of a robust rise in new supply hitting the market. In other words, inventory is rising not from people selling their houses left and right. It's really due to the fact that we're seeing sluggish home sales, and therefore houses are taking longer to sell. So as the months go on, inventory increases, and that's why we're seeing a rise of inventory, not due to the fact that we're seeing a glut of people listing their houses for sale. And therefore, total inventories are rising, and the average time on the market, like I mentioned, is increasing. We therefore now expect home buying demand to remain suppressed, and for a modest increase in sales, those will be delayed until later of 2025. Fannie Mae also states the following: we have interpreted this lack in home sales growth despite rising listings, in other words, rising inventory levels, to mean that there's not sufficient purchase demand at the current price points and rates. In other words, we're seeing sales growth, at relatively low levels, despite a lot more houses for sale. But they believe we're not seeing a big rise in sales due to current price points and rates. In other words, rates and home prices are at elevated levels, keeping home sales at relatively low levels. And because of this imbalance between supply and demand, we have a near record high share of people who are reducing their asking prices on their houses. That's at 7% according to Redfin. That's up from 6.3% from 1 year ago. Therefore, we are anticipating home price growth to decelerate over the next year. In other words, for home prices still increase, but not increase in the same rate in years past. Fannie Mae also provided this as well, looking at a snapshot overall regarding their housing market forecast in this year and also through 2025. Let's first talk about home sales. And these figures, by the way, are seasonally adjusted. They're also annualized as well. This covers the month of August. So for new single-family houses, that actually increased by 3.9% in 2023. The forecast this year, though, is a decrease of 2.2%. Then next year, to basically increase greatly, up by 9.8% compared to 2024. Now, the resale market, entirely different. This is single-family houses, condos, and also co-ops. So there was just under 4.1 million home sales of existing houses last year. That was a giant decrease of nearly 19% compared to 2022. Now, their forecast is calling for only a 1% increase in home sales compared to 2023. Now, this is very much noteworthy because last year levels at just under 4.1 million was nearly a 3-decade low, the lowest level since approximately 1995. So pretty crazy that we're only going to have a 1% increase compared to a multi-decade low potentially this year. Then to increase by 8.3% in 2025. By the way, their forecast for existing home sales through 2025 was actually revised downward from the previous month. So here's a report from 1 month ago. They were predicting that home sales will rise by 1.9% this year. Now it's only at 1%. Then next year to rise by 8.9%. Now that got revised downward to a gain of 8.3%. Let's also have a look at home price changes though, based on their HPI, which is their home price index. So they are forecasting that home prices will increase by 6.1% compared to 2023, then to only increase by 3% next year. This is remarkable because this is the same forecast 1 month ago, but look at their forecast for rates. So rates for a 30-year fix, this year, the average rate for the entire year, 6.7%, then to decrease down to 6%. So they're calling for rates to decrease by about 70 basis points. But despite that, they're calling for home prices to only increase by about half the amount next year compared to this year. 6.1% this year, next year, only a gain of 3%, despite a decrease in rates next year. Here's something you guys should be aware of as well, because their forecast 1 month ago for next year, 2025, they were calling for the average 30-year fixed rate to be 6.4%. Now their new forecast is calling for rates to be 6% in 2025. Therefore, Fannie Mae is predicting that rates will fall more than what was previously expected 1 month ago. However, even with rates falling, they are predicting that prices will rise by half the amount next year compared to this year. So please leave me a comment below with your thoughts regarding their forecast through 2025. Fannie Mae is believing or is forecasting that rates will fall by about 70 basis points next year, and that will still cause home prices to rise by 3%. And also for home sales of existing houses to increase by 8.3%. So my thoughts on this is that, let's just focus on home sales this year, 4.1 million. I also believe we're going to be around 4.1 million this year, on par with last year or lower than last year's levels. And I'm Guessing this because of elevated home prices and of course elevated rates still as well. So I believe that the forecast for home sales this year to be roughly on par with my forecast as well. In regards to forecast regarding rates, I also believe that we're going to see a decrease in rates as well. They are forecasting that rates will decrease to 5.9% in Q4 of 2025. In my opinion, this all depends on the labor market and of course inflation as well. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value out of today's video, then please hit the like button. Also, consider subscribing as well. We just reached 100,000 subscribers about 2 weeks ago. Just absolutely mind-blowing. I appreciate you guys so much. Have an amazing day and look forward to seeing you in the next video.